Good evening, everyone, and welcome to this evening's Audit Committee meeting on June the 26th, 2023. Before we begin the meeting, I'd like to acknowledge that this evening we're gathering on the traditional territory of the neutral Anishinaabe and Haudenosaunee peoples. We recognize our responsibility to serve as stewards for the land and honor the original caretakers who came before us. Our community is enriched by the enduring knowledge and deep-rooted traditions of the diverse First Nations, Métis, and Inuit in Kitchener today. Are there any disclosures of pecuniary interest? There being none, we'll move right into our audit consolidated financial statements, and I'll turn the floor over to Greg Damasio, our Manager of Finance Reporting and Analysis. Welcome, Greg.
Thank you.
And I will note that we also have a delegation that he'll be introducing shortly, which is Matt Beddick from KPMG and Courtney Cheel from KPMG, our auditors.
Okay. So thank you, everyone, for having me here today to present the 2022 audited financial statements. Just a quick note before we begin. The city's consolidated financial statements, along with the statements of various consolidated entities, are included as Attachment B to today's report. Today, we'll be discussing some of the key highlights from those statements. And in the coming weeks, the city's full financial report, including the financial statement discussion and analysis, will be circulated to the Audit Committee and also posted on the city's website. So for today's presentation, I will start by going through a few financial highlights from 2022. Next, I'll go over some reminders of how the audited financial statements differ from the budget variance reporting provided throughout the year. Then I will provide an update on the city's key financial indicators as laid out in the city's long-term financial plan. And after that, I'll turn the presentation over to KPMG to present the findings of their audit. So looking at the financial highlights of the past year, we can see that there was a significant impact from the merger of Kitchener-Wilmot Hydro Inc. and Waterloo North Hydro Inc. into the new entity Innova Power Corp., which became effective on September 1st, 2022. At the same time, the parent companies of these entities, Kitchener Power Corp. And Waterloo North Hydro Holding Corporation, merged into Innova Energy Corporation. The impact of this merger can be seen on the statement of financial position, where we see a large year-over-year increase in the city's investment in Innova Energy Corporation. And the biggest driver of that increase is the non-cash gain on dilution from the city's prior interest in Kitchener Power Corp. And that was $71 million, and that resulted from the merger. So this gain does not represent a cash inflow to the city, but rather is a result of the application of accounting standards to the merger, taking into effect both the carrying value of the city's prior investment in Kitchener Power Corp, as well as the fair value of the new investment in Innova Energy Corporation as of the effective date of the transaction. Aside from this, on the statement of financial position, we also see large increases in both trade and other accounts receivable, as well as accounts payable and accrued liabilities. In both cases, these were due to a large number of smaller increases. And for accounts payable, we also saw increases to several payables resulting from higher inflation in the past year. On the statement of operations, Gasworks saw both revenues and expenses that were significantly higher than budget and higher than the prior year. In both cases, this was mainly due to increased gas consumption because of a colder winter, with the increase in expenses partially offset by favorable hedging strategies. The year-over-year increases can also be explained by increases in gas rates charged to customers and those paid to suppliers. We also saw the ongoing resumption of some activities that were paused or limited due to the COVID-19 pandemic. For example, development charge revenue recognized was higher than budget and increased from the prior year as a result of more work being done on certain designated growth projects. And recreation and cultural services user fees revenue and expenses increased significantly from the prior year due to the resumption of recreation programming following closures and reduced capacity that was seen in the earlier stages of the pandemic. In March, you received a staff report that presented the financial results for the year ended December 31st, 2022, specifically for the tax-based operations and the city's enterprises. The consolidated financial statements being presented today include the results of more than just the tax-based operations and enterprises. They also include various local boards that must be consolidated, including the Centre in the Square, Kitchener Public Library, Belmont Improvement Area, and Kitchener Downtown Improvement Area. They also account for the city's two government business enterprises, Innova Energy Corporation and Kitchener Generation Corporation. Finally, they include the city's capital activity and the activity in the city's reserve funds, as well as other adjustments made to comply with Canadian public sector accounting standards. This slide is meant to demonstrate the difference between the annual surplus on the statement of operations and the consolidated financial statements compared to the operating results that were provided to you in March. So as you can see, the total operating surplus for the tax base and enterprises presented in March was approximately $7 million, compared to a surplus of $181 million presented in the financial statements today. The first contributor to the difference is the requirement to consolidate certain boards, as mentioned earlier, and to record the change in the investment in the government business enterprises. The addition of these items adds approximately $13 million to the surplus for the year. Further adjustments are then made to these combined results to have them reported in line with the standards set out by the Public Sector Accounting Board, or PSAB. Some of the larger adjustments required to comply with PSAB relate to the city's tangible capital assets, or TCA. For example, the recognition of revenue relating to contributions of TCA and an expense for the amortization of TCA. Transfers from operations to capital or reserve funds and transfers from capital or reserve funds to operations are removed in the consolidation, as these are an expense in one fund and revenue in another. And unique to this year, as mentioned earlier, is the non-cash gain on dilution from the Innova merger, which added $71 million to the surplus for the year. Taking all of these items into consideration leads to the annual surplus as presented in the consolidated statements of approximately $181 million. Next, I will discuss some key financial indicators. The city's first long-term financial plan was endorsed by Council in October of 2019. The plan includes 5 financial indicators which, when looked at together, provide a good representation of the city's financial position. For each of these indicators, we present both a 10-year trend analysis as well as a comparison with a peer group of other lower-tier municipalities with similar populations. Please note that the comparison with peers includes data from 2019 through 2021, as 2022 data is not yet available for most municipalities. The first indicator is taxes receivable as a percentage of taxes levied. There is a recommended maximum of 8%, and if this percentage increases over time, it may indicate a decline in the municipality's economic health. So as you can see, the city's ratio, the green line, has been relatively consistent and remains well below the recommended maximum, which is the red line at the top of the graph. This graph shows the city's ratio, the green bar in the middle, compared to other similar municipalities, the average of which is indicated by the dotted line in the middle of the graph. As you can see, the city is right in line with the average of the comparator municipalities. The second indicator looks at reserve balances compared to total expenses. This gives an indication of how much money is set aside for future needs or contingencies. And the Ministry of Municipal Affairs and Housing recommends a minimum ratio of 20%. The city's reserve balances have grown each year over the past decade, but as you can see, the city's ratio has only risen above the recommended minimum of 20% in the last 4 years. The city is on the low end of the range relative to other comparator municipalities. Council is encouraged to continue setting aside funds when able to do so that reserves are available to ensure future liabilities can be met, capital assets can be properly maintained, and sufficient financial flexibility exists to respond to economic cycles and unanticipated financial requirements. The next indicator is looking at debt charges to total revenues less donated tangible capital assets, or TCAs. There is a recommended maximum ratio of 5%, and the city's borrowing is also limited by Ontario Regulation 403/02, Debt and Financial Obligation Limits, and by the city's capital financing and debt policy. So as you can see, the city is well below the recommended maximum of 5%. The city is also right in line with the average rate of the comparator municipalities. The next indicator we will look at is the debt to reserve ratio. The general benchmark for this indicator is a maximum of a 1-to-1 ratio of total debt to total reserves. The city's declining debt and increasing reserves has led to vast improvements in this ratio over the past decade. For the last 5 years, the city has been at or below the benchmark for this ratio of $1 in reserves for every dollar held in debt. The city had been slightly above average for the comparator group, but is now slightly below average as a result of the improvements made. The last financial indicator we will look at today is the ratio of financial assets to liabilities. A ratio of 1-to-1 ensures that there are enough financial assets to cover all of the municipality's liabilities. So as you can see, the city has maintained a steady and increasing ratio in recent years. And the city's ratio has also been slightly higher than average of the comparator municipalities. So overall, we can see from the key financial indicators that despite the significant challenges of the last couple of years with the pandemic and more recently with higher inflation, the city has maintained a stable financial position. This has been accomplished through a combination of the city's commitment to sound financial management and fiscal prudence, as well as continuing funding support received from other levels of government. I'm happy to take any questions from the Audit Committee at this time, and I'll also be available for questions following KPMG's presentation.
Okay, thank you. Any questions for Greg? If they're not, we can always come back to him. We'll turn it right over to Matt then and the KPMG team. Thanks, Greg. Great presentation.
Thanks, Greg. And to the Mayor and Chair and Council, so my name is Matt.
Sorry, just hang on one sec. They all say what? Sorry, just one sec. None of them are lighting up. Can you try turning it on again? We're in council mode. Okay, we might have to do a reset after this. We'll let you proceed. Thank you, sir. Sorry about that.
That is okay. Sorry, I am coming through on the mic, so that's
Sorry, did anybody have a question of Greg, though? Just make sure. So I'll do it the old-fashioned way. Raise your hand, and I'll try to catch it. Okay, thank you. Sorry, back to you guys. Sorry about that.
That's okay. Thank you for inviting us here today. As introduced, my name is Matthew Vedek. I'm the lead audit partner from KPMG for the audit of the city's financial statements. And with me is the senior manager on the account, Courtney Chill. Over the next several minutes, we'll go through our audit findings and discuss some of the highlights as well as some required communications as required by the audit standards. We're happy to take questions throughout as well as take questions at the end. As I advance through the presentation materials, I'll touch on a few things as we go. So here's the audit status. As of today, we are virtually complete our audit, and once we complete the items that are listed here above, we'll be in a position to issue our audit reports. Those are clean audit reports. They don't have any qualifications or modifications, which is what you would expect, and I would say is the first of three things that council or committee should take away from our report. On the next slide, we are required to disclose and discuss with this committee our risk of fraud in the audit. And just for clarity, we're talking about how the financial accounts might be intentionally manipulated or misrepresented. This is a requirement of all audits of all financial statements in Canada, so it's not unique to the City of Kitchener. As a result of that, we are required to make certain assessments of what we think the risk is and make sure that our audit has some responses to those risks. We've undertaken a variety of steps and procedures, and we're happy to report that we did not identify anything of any concern whatsoever. Courtney?
Thanks, Matt. So for the next few slides, I'll just talk about some other areas of focus. The first area of focus is post-employment benefits. And the reason why we are focusing on this area is because it is a significant estimate with significant judgment used by management as well as management specialists, which is Mandela's actuarial. Our procedures that we performed on this area is confirming with Mandela's the balances at year end, as well as some disclosure items. We also tested the inputs used and the assumptions used within Mandela's calculation of the balances, and there were no issues noted. So the next area is tangible capital assets, and the reason we focus on this area is simply due to the size of the balance. As of end of year 2022, it was net book value of $1.4 billion. The procedures that we perform on tangible capital assets are we perform a sample of addition testing as well as disposals, as well as we ensure the reasonableness of the amortization expense. And we also review operating expense accounts to make sure that there were no assets that were expensed inappropriately and ensure that they were reasonable, and no issues identified for this. The last area of focus is the obligatory reserve fund revenue and deferred revenue. The reason we focus on this area is due to the revenue recognized from Development Charge Reserve Fund is subject to judgment as capital projects must be growth-related in nature before you can recognize the revenue. Our procedures that we performed on the development charges is obtaining management's continuity schedule and ensuring it was mathematically accurate, as well as we performed a sample of development charges collections to ensure those were appropriate, and then we reviewed the revenue and performed a sample over the accuracy of the revenue and ensured that the capital project that the funds were used to fund was growth-related in nature. Through our procedures, we didn't find any issues with those.
As Greg mentioned, a significant event in this year's financial statements was the Innova merger transaction. And just for transparency, KPMG and myself as the lead audit partner are the auditors for both Kitchener Power Corp and Waterloo North Hydro Holding Corp prior to the merger, and we continue to be the auditors of Innova carrying forward. That doesn't create any conflict of interest, but it's just good to make sure everybody is aware. We did examine the transaction thoroughly. We looked at the participation agreements between all parties. We looked at the financial statements of the pre-merger entities, as well as recalculated the amounts that are now recorded in your financial statements. As Greg quite rightly mentioned, there was a gain that was recorded in this year's financial statements of approximately $72 million. We appreciate this is a large figure and one that perhaps would open some eyes. It is a non-cash gain. What it really is doing is it's disposing of a portion of your investment in Kitchener Power Corp, because now you don't have the same level of ownership of that, but you're also picking up a new portion of Waterloo North Hydro Holding Corp, and that's done at the fair value. Another thing to mention is that the accounting for this transaction by the City of Waterloo and the other members of the participation agreement is actually different, based on the fact that the City of Kitchener still holds a controlling share of Innova. On the next page, we disclose any amounts corrected or uncorrected that we identified through the financial statements. Happy to say no findings of ours required correction in the financial statements, and there was one minor item that remains uncorrected, but really that's a carry forward from the prior year. So as I mentioned earlier, of the three things that Council should take away from this, the second is that there are no required corrections to the statements. That means the information that we received at the commencement of the audit was sufficient for completing the financial statements in a fair and accurate way. The next slide discloses control deficiencies. So the audit standards require us to identify and communicate if there are any significant deficiencies in internal control. We're happy to say we have not identified any. And again, this is the third in my list of three things that Council should take away. So A, we're looking at a clean audit opinion. B, no corrections were required to the accounting records. And C, we did not identify any significant control deficiencies. As I conclude our formal comments, I just want to bring to your attention one item on this slide, and that's the accounting for asset retirement obligations, which will be in the 2023 financial statements. This is a very new accounting for the city, and it will require the city to identify any situations where they are required to either take an asset out of service or decommission an asset. And where those costs will be incurred in the future, a liability will be recorded in the financial statements. This could include the existence of asbestos in any city-owned buildings and the cost of remediating or removing that asbestos prior to either a demolition or a renovation of that property, amongst other things. So with that, I would like to thank Greg and his team and Ryan for all of their assistance and cooperation through the audit. We had excellent cooperation, and we received the information that we required on a timely and accurate basis, and we couldn't be here today without that assistance. So with that, I'll close our formal comments and turn it back to the chair.
Great. Thank you very much to both of you. Any questions? Yes, Councillor Clancy. Hang on a sec. I'll have to just hang on a sec. Hold on. Let me see if I can do anything. So much. I'm not even going to try to be funny with it. It is Why don't you come here?
I know that the province is auditing various municipalities. What's your opinion of our reserve status? High for one of the ratios, but good for other ratios. Like, do you think we're in a good position if we are kind of, I can't remember the term of the person who is delegated, but what's your sense of how we fare if our goals were looked at in this way?
Sure. I do not know the metrics or the sort of the thresholds that the province is looking at for what they might consider unacceptably too high or unacceptably too low levels of reserves and reserve funds. I would say that when looking at that, one needs to consider a sort of a triad of things. It's not only the reserves or the reserve funds, but the level of debt that you have, as well as the state of your infrastructure. So, for example, a municipality with really high reserves might have very, very high debt and might have very, very poor infrastructure. So in that case, they'd be using those reserves for future expenditures. Conversely, you might have very, very low reserves, very, very low debt, and very, very good infrastructure, in which case the city would then be in a position where we wanted to increase its reserves. So speaking and picking up on some of the comments that Greg made, over the past number of years, the city has seen its debt come down and seen its reserves come up, because prior to it was likely in a more challenging state because of the significant level of debt that was taken on, primarily due to the EDIF projects from, gosh, the mayor will have to help me out with this, more than 10 years ago, almost 20 years ago.
EDIF, 2004.
2004. I wasn't around during that year, so... So when I think about that from the City of Kitchener's perspective, I would say you're probably in about a middle position because the debt levels are still fairly high relative to other lower tier municipalities with similar types of situations. But with those reserve levels climbing, I guess there is some risk, but again, I can't see into I call it the political winds of the province for undertaking such an initiative. You're welcome.
Any other questions? Okay, there being none, thank you to both of you. And we have a motion that we need to consider before us, and that's that the 2022 audited consolidated financial statements of the Corporation of the City of Kitchener be approved. Does someone care to move that? Moved by Councillor Chapman, seconded by Councillor Michaud. All those in favor? Any opposed? That's carried. I just want to take this opportunity to thank staff. There's obviously lots of work goes on throughout the year in finance, but there's two big chunks of work that happen annually. One is the budget, and the other one is getting our year-end and audited statements done. And I want to thank everyone who's been involved with that, as well as our auditing firm, KPMG, for the great work that's done on that. So thanks, everyone. We'll now move on to item number 5.1, which is the second quarter audit status report, and invite Ms. Tasker to the podium. Welcome, Karina.
Great, thank you. All right, so today I'll be taking you through two audits that were completed in the second quarter, namely the controls audit of petty cash and floats, and a program review of the facility booking and risk assessment process. Also in progress right now, I have a controls audit of accounting processes and an ongoing review of training documentation. So first up, we have the petty cash and float controls audit. And this is one of the ones that I have on my list of rows, simply to confirm the balances of the various petty cash and floats, that they are correct and that there are adequate controls in place to protect cash from theft. The scope included 29 different city facilities or locations within City Hall that have either a petty cash float and or a change float. So this is mainly divisions that are frontline service at City Hall and public-facing services which require floats to make change for customer transactions such as community centers or pools. The methodology for this audit involves me showing up unannounced at all of the locations, counting their cash and comparing to how much they should have on hand. While there, I also checked that the cash was securely locked when I arrived in either a safe, a drawer, or a point-of-sale machine. And then I also asked about the process to reconcile the amounts. For the locations with petty cash, I also checked that the petty cash vouchers were filled in correctly with proper authorization and business purpose, and original receipts were attached. So with regards to the petty cash, when SAP Concur was implemented in 2020 for online employee expense submission, most areas were required to return their petty cash floats, as all employees with a city email address are now required to use Concur for expenses. This has greatly decreased the risk related to cash, as there are only 4 petty cash floats left. These 4 remaining petty cash locations are necessary due to staff without city emails or other operational needs. I found that 2 of the 4 were balanced correctly, while the other 2 had more money than was expected. Again, this can be traced back to the staff transitions over the pandemic and that they had not been shown how to reconcile correctly. Now that they've been made aware of this, they can return the floats back to the correct amount the next time they reconcile. Only the parking petty cash floats had vouchers in the safe, and on review it was found that proper authorization and receipts were missing in some cases. Staff have been instructed on the proper way to fill out the vouchers. However, once the new parking system is in place, there will no longer be a need for the parking petty cash float, as it was being used for transponder refunds, which won't be used with the new system. For the change floats, I found that all but one of the floats were securely locked in a safe or a point-of-sale machine. The one that was left in an unlocked drawer is now securely locked at all times. I also found that 3 of the floats were no longer required and will be returned to finance to be deposited. In total, 21 of the 31 floats balanced exactly, 4 were short money, and 6 had excess money. The over and short amounts were very small, less than $5, with the exception of parking. Parking has the largest float of all the locations due to the nature of the business and all of the parking payment machines which require change. There is a change float stored in a safe, which was, when counted, was apparently short $15,000 compared to what was recorded in finance. However, we are suspecting that the missing refunds are actually in the parking machines, and when counted together with the amount in the safe, should balance. Again, there was a change in staff over the course of the pandemic, and current staff were unaware of the requirement to balance or how to go about it. As the new system is installed, management is going to confirm the totals that are located in the machines and create a reconciliation process which can be followed monthly. They will confirm back to me when that is complete and let me know if there are in fact any shortages of money or not. So there are only a few simple recommendations in this audit. First, finance will need to update their main list of floats to capture any new staff that are now responsible for the money and adjust the amounts that were required. They will also be responsible for facilitating the return and deposit of the 3 unneeded floats. And finally, as mentioned, parking management will reconcile the petty cash and change floats and establish a reconciliation process going forward. Are there any questions on this review?
Any questions? Okay, there being none, you want to continue?
All right, so this next review was one that was requested by Council in June of last year when the new online facility booking and risk assessment process was launched. You had requested that at the end of the year, we debrief on how things were going and whether the process was effective or not. For those of you new to Council, I'll just give you a brief description of what was implemented. And this was implemented last June in response to an audit recommendation from Public Safety Canada. First, we launched a centralized facility rentals webpage, which includes information about all bookable city facilities and outdoor spaces, such as room rental rates, room capacity, and a new facility booking policy, which outlines acceptable public uses of our spaces. On that page is a link to an online inquiry form where customers can indicate the details of their proposed event, including the date, their venue preference, and attributes of the event. This is then automatically routed to their first choice of venue, where staff will review availability. If the venue is not available for staff, staff will contact second or third choice venues on behalf of the customer. While this is more work for staff, this streamlines the process for the customer as they don't have to contact each facility themselves. Once a venue is found for the event date, the form is sent through a risk assessment tool which automatically routes the event to the applicable internal stakeholders such as security, fire, licensing, legal, etc., based on the attributes of the event. These risk assessors then review the event details and make comments, including any required actions, such as permits, safety precautions, or other actions to make the event run smoothly and mitigate risk for the city. Once complete, the event host will then finalize the booking contract with the customer. So the review objective was to assess the effectiveness of the risk assessment process for staff and the impact of the online booking process on staff and customers in order to identify further areas for improvement. To do this, I conducted surveys of staff, including the facility hosts, the risk assessors, and the technical support staff who support the web page, online form, and the risk assessment tool. The customer service team also collected customer opinions through the customer experience surveys, which launched after a customer completed an online facility inquiry form. And I reviewed the booking data from the inquiry form and metrics from the risk assessment tool. So when I analyzed the booking data, I found that there were 2,184 booking inquiries had been received through the new online form between June of 2022 when it launched until March of this year when I started this report. However, just under half of those did not result in a booking. This is consistent with the previous anecdotal experience of staff, where they had indicated that a lot of people are just calling for pricing and availability as they assess multiple possible venues. We had hoped that by putting the room pricing and the capacities on the web page that these types of inquiries would decrease, but that does not appear to be the case. What we were able to glean from the data, though, was that the majority of the inquiries are for birthday parties at community centers, which are typically low risk. This means that there may be an opportunity to streamline this process further by offering standard birthday party packages, which are pre-approved by the risk assessors as long as they don't have any of the risk elements present. You may recall you had also asked me to report on the number of Indigenous events that received the fee waiver. For the entirety of 2022, we had 2 Indigenous events booked through the new inquiry form and 6 ongoing events which had been booked prior to the launch. In total, there was $19,000 of fees waived. From June to March, we had 949 risk assessment requests across multiple risk assessors. Once the risk assessors receive an event, they have 2 business days to respond with comments to the event host, which can include that no further action is required from their perspective. They also have the ability to flag if they think that they got sent the risk assessment in error, meaning that the workflow logic should be examined. The status can also change to canceled if the customer cancels the booking before completion. What I found was that only 14% had been completed with comments, while 44% had no response at all. The remaining 42% are made up of either canceled events or ones that they were deemed not applicable. So I delved into this data a little bit deeper to see why so many did not have a response, since all of the risk assessors had been trained on how to complete one and were all committed to trying to reach the 2-day turnaround. What I found was that due to the workflow logic, the majority of the risk assessments were flowed to the custodial or parks and cemetery staff. They had been asked to be made aware of certain types of events so that they could schedule staff to clean up the facility or the space before and or after the event. However, there is no risk element that they are required to comment on, so they were leaving their risk assessments blank. So there does appear to be an opportunity to streamline the logic and perhaps come up with another way to inform these groups of the events rather than pushing them through the risk assessment. Based on the timestamps from the responses that were received, the average response time is 1.5 days, which on the face seems like good news since they are meeting the 2-day turnaround. However, there were some risk assessors who were higher than the 2 days, which we'll see in a moment was very frustrating for the event hosts. What I heard from the event hosts was that for the most part, they felt the new online form was a great addition to the process as it collected all of the relevant information in one spot and saved them time going back and forth with the customer to gather it. However, there were several suggestions to improve the formatting and fields in the form, which can be explored. The website, as mentioned, didn't have as big of an impact on decreasing inquiry calls or emails to event hosts as originally hoped. Some suggestions for improvement include adding pictures of the rooms, more information about pricing, and the ability to see availability in a calendar format. They did mention that some of the risk assessors are responding quickly, but that others are taking too long, leading them to either have to reach out to them or wait or bypass their feedback in order to complete the booking. When asked overall if they felt the new process had decreased the lead time from point of inquiry to when the room is booked and decreased the amount of staff time spent on rentals, about half of the respondents said yes. However, an equal number thought that the process is cumbersome and could use further improvement. The risk assessors generally thought that filling out the risk assessment took very short amount of time, on average less than 15 minutes for each. They also liked that it automatically routes the events to the correct stakeholders, making sure that no one is left out of the process, as was the case prior to this process being implemented. What they did notice is that, with the exception of the custodial and parks and cemeteries, that not many of the events are triggered as high risk and thus are not requiring their input. When this process was first discussed, it was felt that they were being left out of the many events that they should have had input on. However, this experience shows that the majority of the events are not as high risk as was previously thought. The technical support staff were surveyed to see how easy or hard it has been to sort out technical glitches and support staff using the tools. They were asked to comment on what they saw as the pros and cons of the process and the tools. They felt that the single inquiry form was a definite improvement for the customer, who now has a one-stop shop when trying to find a rental venue. They also felt that the risk assessment tool was easy to maintain and make adjustments to logic when asked. They did mention, however, that the inquiry form is becoming very hard to maintain due to its complexity. And for those who have not seen the form in action, it has coding in the background which will only display venues which have enough capacity to hold the number of participants that the customer has indicated. And the customer also has the ability to narrow their selection based on the type of venue, such as pool, community center, golf course, etc. So the support staff said that the form builder software that was used for this form was never intended for these types of dynamic selections. So they have made some recommendations for better software to explore for future iterations of this program. The final piece of input received for this review came from the customer experience surveys, which launched after a customer completed an online facility inquiry form. The survey ran for 4 weeks in January and February of this year and received 158 responses. 76% of the respondents felt that the form was easy or very easy to fill out. 77% of repeat customers felt that the form was easier than the previous process of emailing or phoning the venue directly. And 73% of respondents were satisfied overall with the process. Some suggestions for improvements include faster response time by staff, adding pictures of the venues to the web page, and showing the room availability. So based on all of this input, I've recommended that staff consider the improvement suggestions that were provided for both the form and the web page and implement those which are feasible. They should also meet with the risk assessors to determine if some are not required and can be informed of the events in another manner, and whether the threshold criteria for the remaining stakeholders is accurate. Further consultation with the event hosts should also be done to see how the process could be streamlined for them. One example is exploring the possibility of exempting birthday parties at community centers for risk assessment process. They should also explore with TIS staff the ability to add room availability to a calendar to the web page. At the time that this was implemented, this was not possible, but there may be other solutions available now. And finally, they should look into the cost and feasibility of transitioning the form from Form Builder to a more robust platform. Are there any questions on this review?
Any questions? You've done such a great job that there aren't any.
Easy peasy.
Thank you.
Thank you very much.
So that's everything.
That's everything, yeah.
Okay, we don't need to do anything here, so I will just say thank you to staff and take a motion to adjourn. Moved by Councillor Deneau, second by Councillor Ioannidis. All those in favor? Opposed? That's carried. And we'll be back around 7. Be back here for 7 while we reset the system.